All right, get ready to dive into some pretty fascinating stuff today. We're talking U.S. economic trends, the upcoming election, and of course those tech earnings reports that have everyone buzzing.
Yeah, there's a lot to unpack.
We're working with this script: key U.S. economic trends, election insights, and tech earnings review. I feel like we're piecing together a puzzle here.
It is a bit like that. Lots of different pieces, but they all fit together.
Okay, well, let's start putting those pieces together. First up, the JOLTS report. I know it's about job openings, but honestly, why should the average person care about this?
Think of it this way. The JOLTS report gives us clues about what the Federal Reserve might do with interest rates. It's like a snapshot of the labor market. How many jobs are out there? How many people are quitting, getting laid off? The Fed uses this info, along with data on inflation, to decide whether to raise or lower those rates.
So if there are tons of job openings, that means the economy is hot, and the Fed might raise rates to cool things down a bit.
You got it. And you know what's interesting? This latest report actually showed a pretty big drop in job openings.
Oh, really?
Yeah, down to 7.443 million, the lowest we've seen since way back in March 2021.
So that's a sign that the job market is cooling off.
It seems that way. Could be good news for anyone worried about inflation, but it might also mean it's a little harder to find a new job if you're looking.
It's a trade-off then. What about all the talk about layoffs? Is that a sign that things are about to get worse?
Well, the layoff rate did go up a tiny bit from 1% to 1.2%. Definitely something to keep an eye on. But here's something I found really interesting. Most of the job reductions were in areas like education and healthcare.
Those don't seem like industries that are usually hit hard when the economy takes a downturn.
Exactly. It makes you think. At the same time, though, job openings actually went up in places like financial services and business services, and those are sectors that tend to be more sensitive to economic shifts.
So maybe a sign of some resilience in the economy.
Could be. It's a complex picture, that's for sure.
You're telling me. Okay, enough about jobs for now. Let's talk elections.
Ah, yes. Election season. Always a bit of a roller coaster ride.
Definitely. Especially for investors. I think a lot of people get nervous about how all the political stuff might impact their investments.
I get it. But you know, history actually has some good lessons for us here. There are a lot of myths out there about how elections affect the market.
Okay, I'm all ears. Bust those myths for me. What are some of the things investors should keep in mind?
First of all, the idea that the market does better under one party or the other. Total myth.
Wait, seriously? I always thought...
It's a common belief, but if you actually look at the data, it doesn't hold up. Going all the way back to 1930, stocks have averaged a 9.6% return in the year after a Democrat wins. And after a Republican win, it's 5.7%.
Okay, that sounds like a pretty big difference.
It does, but here's the catch. Over a 10-year period, both parties average returns around 7%. So really, it evens out in the long run.
That's fascinating. So it's not as simple as saying this party is good for the market, that party is bad for the market. Nope. It's much more nuanced than that. Which brings us to the second big lesson. Market fundamentals are way more important than all the political headlines and sound bites.
So tune out the noise and focus on the fundamentals.
Exactly. Remember the dot-com bubble burst? That was an election year, and the market tanked. But it had nothing to do with the election. It was all about the underlying economic conditions at the time.
Makes sense. Okay, what else should investors keep in mind during election season?
This one's important. Don't make big changes to your portfolio based on who you think is going to win.
So don't try to outsmart the market by betting on certain sectors based on campaign promises.
Precisely. You never know how things will actually play out. For example, under the Biden administration, traditional energy actually did really well. And during the Trump presidency, clean energy thrived, not what many people would have predicted.
Wow, that's surprising. Okay, so don't try to predict the unpredictable. What's the final takeaway?
This one's simple. Buckle up for some short-term volatility, but don't let it derail your long-term strategy. So election years tend to make the market a bit jumpy.
They do. If you look at the VIX index, which measures market volatility, you'll see it often spikes in September and October leading up to the election. But here's the good news. The market usually recovers pretty quickly after all the election drama settles down.
So stay calm and carry on.
Exactly.
So super helpful. Okay, let's switch gears again. Tech earnings.
Let's do it.
I'm dying to hear about AMD. Sounds like their earnings report was a bit of a roller coaster ride.
It was a wild one. On the one hand, they beat revenue expectations. They brought in $6.82 billion, which is a 17% increase from last year. And their data center revenue was amazing, 122% surge.
That's huge. So why did their stock price take a hit?
Well, it seems investors had set their expectations really, really high. Maybe all the AI hype got to them. And when AMD's guidance for the next quarter didn't meet those sky-high expectations.
Ah, so it was a bit of a buy the rumor, sell the news
Uh,
situation.
Could be. But those data center numbers are still seriously impressive. Definitely telling us something about the growth of the AI space.
Okay, speaking of AI, what about Google? They seem to have a pretty awesome quarter.
They did. They absolutely crushed it, exceeded expectations across the board. Revenue came in at a massive $88.27 billion, which is a 15% jump from last year.
Wow, that's a lot of billions. Where did they see the biggest wins?
Their ad revenue was still strong. They hit $76.51 billion. And their cloud division continued its impressive growth, up 35% from last year. And a lot of that cloud growth is being driven by, you guessed it, AI-powered services.
So all those investments Google has been making in AI, seems like they're paying off.
It definitely looks that way. And they addressed those concerns about overspending on AI head-on, assuring investors that their AI spending would stay manageable and steady.
Okay, that makes sense. But how do you manage to stay ahead in a field that's changing so rapidly and keep costs under control?
Well, get this. They revealed that they've been able to cut AI costs by, wait for it, 80 to 90%.
Hold on. 80 to 90%. How is that even possible?
Some really impressive internal innovations.
What did they do? Fire their entire AI team?
Not quite. They haven't revealed all the details, but it seems like they've found ways to optimize both their hardware and their software. Think more efficient chips and systems designed specifically for AI, and then advanced algorithms and machine learning techniques to streamline their processes.
So basically, they're building a super efficient AI machine.
You got it.
That's amazing.
And the implications go way beyond just saving money. We could be talking faster processing speeds, more sophisticated AI models, and ultimately more powerful AI applications across all sorts of industries.
So that's something I can get behind. More powerful and more accessible AI. Okay, this is all so fascinating, but we have to take a quick break. We'll be back in a flash to keep this conversation going. All right, we're back, and my mind is still buzzing about Google's AI cost reductions. 80 to 90%, that's incredible.
I know, right? It's pretty mind-blowing. And what's even more exciting is what this could mean for the future of AI. If Google can achieve these kinds of savings with all their resources, just imagine what this could mean for smaller companies, startups, even individual developers.
It's like you said earlier, it's about democratizing access to AI, giving everyone a chance to play in this space.
Exactly. And that could lead to so many new and innovative AI applications. We're talking healthcare, education, you name it.
I'm already getting excited just thinking about the possibilities. But before we get too far ahead of ourselves, can we rewind a bit? You're talking about those internal innovations that allowed Google to make these cost reductions. What exactly did they do?
Well, they haven't spilled all their secrets, but they've given us some clues. It seems like they've focused on optimizing both their hardware and their software. On the hardware side, they've probably developed much more efficient chips and systems specifically designed for those AI workloads. Purpose-built, you could say.
Ah, so they're creating custom-made AI engines.
You got it. And on the software side, they're likely using super advanced algorithms and machine learning techniques to streamline those AI processes. Less computing power needed, which means lower costs.
So it's like a perfect storm of smarter hardware and leaner software working together to really slash those AI expenses.
Exactly. And the implications go beyond just cost savings. We could be talking faster processing speeds, more sophisticated AI models, and even more powerful AI applications across the board.
That's what I like to hear. More power to the AI. Speaking of power, I wanted to circle back to AMD. Earlier, you mentioned their impressive data center revenue growth. What's the bigger picture there?
AMD's success is a great example of just how much the demand for high-performance computing is exploding right now. And it's not just about AI either. It's about the sheer volume of data that's being generated and processed every single second, from cloud computing and scientific research to the games we play and the shows we stream.
So the digital world is basically growing at an insane pace, and we need more powerful chips to keep up with all that data.
You nailed it. And that's creating huge opportunities for companies like AMD that specialize in designing and manufacturing those powerful chips. And of course, for companies like Google, who are using those chips to power their AI innovations.
Sounds like the chip industry is in for a wild ride, but
Yeah.
for investors who might be thinking about jumping into this space, what's your advice?
The chip industry is a complex and fast-moving world. Do your homework. Understand the different companies, their strategies, and the risks involved. It's not as simple as just buying any chip stock and hoping for the best.
So don't just blindly jump on the chip bandwagon. Look for companies that are driving innovation, have a strong financial foundation, and a clear vision for where the industry is heading.
Exactly. Look for substance, not just hype.
I like it. Okay, before we wrap up completely, I want to circle back to something we talked about earlier, elections. All those insights you shared about how investors should approach election season were so helpful, and with Election Day just around the corner, I think they deserve another mention.
I agree. It's easy to get caught up in the emotion and drama of an election, but as investors, we have to stay focused on the bigger picture, those long-term fundamentals.
Totally. So for our listeners who might need a quick refresher, can we recap those 4 key lessons?
Absolutely. Lesson number 1. The market doesn't play favorites when it comes to political parties. Returns tend to even out over time, no matter who's in office.
Right, and lesson number 2. Those market fundamentals, they're the real drivers of long-term performance, not the election headlines. Tune out the noise and focus on the substance.
And lesson number 3. Don't try to outsmart the market by making big portfolio changes based on predictions about which sectors will win or lose under a particular administration. Those assumptions can be really misleading.
And finally, lesson number 4. A bit of short-term volatility around elections is totally normal. Don't panic and abandon your long-term strategy just because the market gets a little jittery.
Exactly.
Words to live by.
Okay, I think we've explored a lot of really fascinating ground here today. Time for some final thoughts. Let's bring it all together. We've talked about a lot of different things, but I think they all point to a really interesting picture of what the future might hold.
Okay, so we've covered a lot of ground, from the job market to elections to AI and chips. My head is spinning, but in a good way, I think. It feels like we're on the cusp of some big shifts, wouldn't you say?
Absolutely. I think we're at a really interesting crossroads. All these different forces are converging, and it's creating both challenges and opportunities.
So how do we make sense of it all?
Right.
What are the key things listeners should be thinking about as we head into this new era?
I think one of the most important things is to remember that everything is connected. We've talked about a lot of seemingly separate things, the economy, elections, technology, but they're all intertwined. Like how Google making AI more affordable could have ripple effects across so many industries.
Right. It's not just about tech companies anymore. AI is becoming more accessible to everyone, which is incredibly exciting, but also a little daunting. What are some of the potential implications of that?
Well, on the one hand, we could see an explosion of innovation and creativity as more people and businesses have access to these powerful tools. Think about small businesses developing personalized customer experiences, researchers accelerating scientific breakthroughs, or artists pushing the boundaries of creative expression.
The possibilities are mind-boggling.
Yeah.
But let's be realistic. There are also potential downsides, right?
Of course. As AI becomes more powerful and pervasive, we have to be mindful of the ethical and social implications. We need to ensure that AI is used responsibly and doesn't exacerbate existing inequalities or biases. And we need to be prepared for potential disruptions in the job market as AI automates certain tasks.
So it's not just about embracing the cool new technology. It's about thinking critically about how we want to shape this AI-powered future.
Exactly. We need to have those tough conversations and make conscious choices about how we want AI to be used in our society. But it's not all doom and gloom either. There's so much potential for AI to do good in the world, from improving healthcare and education to tackling climate change.
Okay, so a lot to think about there. But on a more practical level, for our listeners who are also investors, what are some of the economic implications of this AI revolution? Could we see a period of sustained growth as AI becomes more accessible and affordable?
I think that's a very real possibility. When we look at the potential for AI to increase productivity, efficiency, and innovation, it's hard not to be optimistic about the economic benefits. But it's not a guaranteed outcome. A lot depends on how we adapt to these technological changes, address those ethical and social concerns, and ensure that the benefits of AI are shared widely.
It's like you said before, everything is connected. The economic impact of AI will depend not just on the technology itself, but also on the choices we make as a society.
Exactly. And we can't forget about those other big forces at play, like the chip industry and the race to develop ever more powerful computing capabilities. That's all part of this larger story.
It's a lot to take in. But I feel like we've given our listeners a lot to chew on today, from those election insights to the future of AI. Any final thoughts before we sign off?
We've covered a lot of ground, and it's clear that we're living in a time of rapid change and uncertainty. But I think the most important thing is to stay curious, stay adaptable, and stay engaged. Don't be afraid to ask those tough questions and challenge your assumptions. The future isn't something that happens to us, it's something we create.
I love that. So to our listeners, keep exploring, keep learning, and keep those conversations going. Thanks for joining us on this deep dive. We'll see you next time.